IRS going to knock on my door? Is the FBI going to come and, hunt me down?
Is that common for small businesses?
It is. It's more common than I think people want to admit. And finding someone you trust, especially with your money and your taxes, is a very sensitive thing.
I'm about to blow. I'm Tupac with the nouns and Biggie with the flow. Big boy with the style and Andre with the fro.
Ron, thank you so much for joining us today. If you want to tell everybody a little bit about who you are and what you do.
Hey, thanks, Michael. Nice to be here. My name is Ron Cook, and I live in Los Angeles. I'm a CPA, certified public accountant, and I also coach. I have a coaching business, and I coach small business owners and entrepreneurs, help them get set up and organized, deal with their taxes, deal with money issues or blocks on money, and help them make progress in their business.
Love it. Can you share a little bit about your journey, how you transitioned from, I think it was a couple decades in corporate America to starting your own business, helping entrepreneurs and small business owners manage their finances?
So I have to admit that I've been doing this for decades. Yeah, so I have been. I've been a CPA for almost 30 years, originally from Seattle. A couple of years ago, I had a friend come to me and was having some hard times. He had a small business, and he admitted over dinner one night that he hadn't filed taxes in over 3 years. And he lives in California. Oh, wow. So in California, we have state income tax. So he was behind then actually a total of 6 tax returns, yet IRS and state. And so through that, I volunteered to help him get set up. And he was very nervous about doing anything. Our first meeting, I said, well, let's log onto the IRS website and see what we could do. And he was literally shaking and sweating. He said, I can't log into the IRS. I can't do this. And I said, well, why not? He goes, well, people my age always do everything by Google. And so I did this little experiment. I said, fine. So you have a question, go into Google and type in your question. I'm going to go in the IRS. So he was on his computer and I was on mine. He logged into Google and he asked his tax question, and I went to the IRS, and that's generally viewed as the expert in the US. And I looked at my tax question, came up with an answer, and we had 2 totally different answers. He was asking about what happens, can you go to jail if you're behind on your taxes? And so he read his description to me, I read mine, they're totally different. And I said, well, what's the source of yours? And he looked and he said, oh, it's, Bob's Accounting Service from Ohio. And I said, well, I'm talking to the IRS, what you're going to believe. So that led me down a path where I helped him over a couple of months overcome that. We actually got his tax returns filed. I helped him file a letter with IRS. And the IRS has, especially since COVID, much more lenient if you sort of self-report. If you raise your hand and said, hey, I've done something wrong or I didn't file my taxes, they're much more likely to let you out of that if you're doing that. If you wait until they come knocking on your door, they don't knock on your door. But if you wait till you get a letter, it's much more likely they're not going to be that lenient. Anyway, that led me down the path. He referred me to another person. I set up a business. I started doing that. And for me, the real difference is in corporate America, I've had a long career. I've been pretty successful. But at the end of the day, it's hard to feel like you accomplished much or that you helped people. There's no one that's going to say, oh, Ron, you helped me out of the situation or did an amazing job. You were just one more person in corporate America that helped the business. But in this one guy, like my friend, he literally wasn't sleeping at night because he was so worried about, is the IRS going to knock on my door? Is the FBI going to come and, hunt me down? And once he ended up owing some money and he had to make a payment plan. But once that was behind him, he felt a sense of relief and he felt a sense of accomplishment, meaning that he could do something that he thought he couldn't do. Because on our first call, I said, hey, what do you want to do? And he said, I can't do that. His mindset was, I can't do this. I don't know how to do this. I'm not good with numbers. I don't want to do this. And at the end of the time, he certainly was not a tax expert, but he was able to get it done and feels much more in control of his business now.
I love that. I have a few friends and I was talking to them. I think it was a little over a year ago now. And he's like, man, I haven't filed my taxes in 6 years. It's wild to me. Do you see that? Is that common for small businesses?
It is. It's more common than I think people want to admit. And, I've dealt with a lot of people. I've managed teams of over 150 people in my corporate roles. And I've dealt with, people just starting out. I've dealt with all people of walks of life. And I really enjoy talking to people and helping them. And one of the things that I realize is that people who are in financial stress, financial denial, financial difficulty, whether they owe way too much credit card debt or they haven't filed taxes in 3 or 4 or 5 or 6 years, they have a hard time admitting to themselves what the reality is. And they also have a hard time finding someone that they can trust because the internet is great, Instagram, Facebook, all those places are great. But if you were just to go, like right now, go into Instagram and type financial expert or financial help, you get millions, not millions, but you probably get hundreds or thousands of people. And if you dig in and look at their experience, someone, I'm making this up, but someone used to work at Home Depot and then they decided 6 months ago they want to be a tax expert and looked at a few YouTube videos and now they say they're a tax expert. There are so many people out there that are giving wrong information or they don't have experience what to doing, or they're really just in it for the money and not caring about the person. So finding someone you trust, especially with your money and your taxes, is a very sensitive thing. It's more common than you want to believe. And so the first, people ask me this all the time. And what I say is when I deal with clients, they either say one or two things. I'm behind on my taxes or I'm not good with money. And when you dig down, it really gets to the root of it's not their specialty. They might be creative. They might run a business. I've helped, designers and hairdressers and actors and people who do a lot of creative things and have made a lot of money. I mean, this guy that I helped a couple of years ago was making six figures. It's not like he was broke. He was making a lot of money. He just didn't feel that he was not a financial person. He wasn't good with numbers. And it was easier for him to just kind of forget about it as long as he had enough money coming in to pay his bills and to buy a nice car and to live in an apartment. He was happy. People, they always say the two things that you can't get out of in this world are death and taxes. And I don't want to talk about the death part, but the taxes, if you're making money, Warren Buffett, who's one of the most, the richest people in the world and viewed by many as the best investor in the world, has said that he views it as an honor to pay taxes because it's a reflection of how much money he's made. And so if you're paying taxes, it means you're doing something right. If you're a small business owner and you're having to pay tax, it means that you've got enough business savvy, you have enough customers, you have enough things going on that you're bringing money in. You should feel that, I'm helping people minimize their taxes. I don't want you to pay more than you should, but it's an obligation, at least in the US. And if you live in a state like New York or California, you have requirements there. But probably a long-winded answer, but the reality is it's more common than you think. Everyone thinks it's only them. No one else is behind on their taxes. Well, if you go to the IRS and you type in tax relief, they have a whole section on the IRS dedicated just to people who are behind. And so it's more common than you think. My recommendation is always is that you find someone, myself or someone that you know and trust that can help you out of this, and get to the IRS before they get to you. Because if you raise your hand and say, I've made a problem, it's always going to be much easier than if you wait for them to come find you.
Yeah, I think the IRS is one of the only places where you don't, don't ask first, just beg for forgiveness. I think the IRS is one of the only places that you don't want to do that.
You don't want to do that, right? You want to report what you've made, get the back. And if someone owes 6 years of taxes, you have to, unfortunately, start with the oldest one first. So if you haven't filed taxes since 2000, whatever that is, 18, you have to do 2018 and then 2019, 2020. And it doesn't have to be perfect, but sending that in, for sure, once you send those in, you're then going to be contacted by the IRS because they're going to say, hey, these taxes were due 5 years ago. You owe us some interest because you owe us money, right? But again, they're much more lenient, especially since COVID, for people who are starting because they want people to be employed. They want people to work on businesses. And if you're a small business, especially if you're employing other people and doing your part to help the economy, they're going to be much more lenient with you if you say, hey, I've been behind, but I'm now working to get current.
Love it. So you've worked across like a ton of different industries, from media and entertainment to manufacturing. How did those diverse experiences really kind of, shape your perspective on financial management and business strategy?
So whether it be manufacturing, I worked for Panasonic in high-tech manufacturing. I worked for William Morris, which is the largest talent agency in the world in Beverly Hills. And I've been in high-tech companies, a lot of things in between. What you realize is that managing people is less about the details of accounting one-on-one, and it is more about listening to people and understanding what they need. So I heard someone many, many years ago that told me, your creator, God, whoever you believe in, made you with 2 ears and 1 mouth. And that means you should listen twice as much as you should talk. And I think a lot of times when you go if you're working in corporate America, you're talking to your manager, you're going to an accountant, a coach, a life, someone's going to help you in life, your tax person, and they talk nonstop. You really have to stop and say, are they really having my best interest at heart? And what I do when I have a client or a potential client and talking to someone is I listen to, and I just basically say, tell me your story. And then I stop talking, and I want them to tell me, what is it? And sometimes they're afraid. They said, well, I'm not good with numbers. Sometimes I have to kind of, get it out of them. But the bottom line is that I can't, like a doctor, what I tell people is if you go to a doctor and you don't open up about what you've done, or you're not honest with them about everything that hurts or what's wrong, they can't help you. It's the same way with me or anyone helping you with your finances. As hard as it is, you have to rip the Band-Aid off. How much money do you owe on credit cards? How much debt have you had? How many years of taxes have you not paid? I'm sure it wasn't easy for your friend to admit that 6 years is a long time.
Yeah.
But being honest with yourself is the first and really the only place to start. Because if you're not honest with a finance person, then how can I help? I mean, I've had clients at first that didn't want to admit the extent of that. And then when I started reviewing, and then I said, send me your tax return, your bank statements. And then on our second call, and I you told me that you didn't have a lot of credit card debt, and you just sent me this American Express bill and you owe $25,000. So what's the deal here? So sometimes people, I think the other thing is that since I meet most of my clients over Zoom, because I can talk to anyone in the world versus in person, it's easier to do this electronically than it is to do it face to face. So if you and I were in a cafe or in a bar having dinner or a drink or whatever, it's much harder to admit to a real person, hey, Michael, I'm behind. I haven't filed taxes in 6 years. If you send an anonymous email that says, hey, Ron, I need your help because I haven't filed, it's easier. So then when you kind of break the ice, and then you say, okay, hey, let's talk about this, and you get on. But being honest with yourself first is the most important part. And a lot of people say, oh, I have a hard time admitting, because I've had people that I've asked, how much do you owe on credit card debt? I mean, if you haven't filed taxes, it's pretty easy to know. The last time I filed taxes was 2000, whatever, how many years. But if a lot of people get in financial stress and they apply for a bunch of different cards and they have balances on multiple cards, they may not know. And so I've had calls where the first, and it's not been an easy call, and I said, we're going to go and open all of your statements and we're going to come up with a number, because I've said, how much do you owe on credit card debt? I don't know. I don't want to know. Some of them have said, I don't want to know as well. I can't help this if you don't. Is it 10,000 or 100,000? And some of them I've had to literally force them to go online to log into each of the different cards, and we had to tally it up. And it's almost always more than they realize, because if you have one card, it's pretty easy to see my balance is X. If you have 2, 3, 4, when you get beyond 3 cards, it's hard to manage those, and what are the balances and how much are the payments. But it all starts with being honest and open with yourself, and then the person that's trying to help you.
What's the reason, you add up all the credit card data and all of that? Is there tax benefits?
Well, no, I mean, it depends on if you're talking about a business. Is it business debt? Do you have interest and fees? Because if the cards are tagged to your business and you put things on them that were business related, like you're starting a business and you bought a new computer, or you hired a tax account, or you hired me or something like that, and it's business related, and then you get behind and you end up paying interest and fees, you can charge all that to your business. That's fine. If it's personal, you can't. But the main reason I do is because if someone says, I need help, getting my finances in order, I need help getting paid out of debt. If you're talking about a $5,000 debt versus a $100,000 debt, that's a big difference. And I have to figure out, how long is this going to take? What are the payments? How many cards do you have? Are they maxed out? What's the interest rate your thing? Do we need to get into loan consolidation? Do you own a house or cars or things? Because a lot of people, if they own a house or they own a car and they have assets, they don't realize that if they go to a bank and they, let's say they own their car outright, you can go to a bank and get a loan. Even if you have, let's say you bought a car and you paid it off in 3 years and the car is now 5 years old. It's worth $30,000. You can go to a bank and get a loan for $30,000, and the interest is probably half of what a credit card is. People don't know that. So I just want to, going through sort of an inventory to say, how much do you owe? How many assets do you have? And let's put a plan together. And each person is different. I've had people that say, hey, I'll work with you if you guarantee me that I'm going to save X dollars on my tax return, or that you're going to minimize my debt. Well, I don't know you or Michael or whoever I'm working with. And so it starts with with a doctor. You go in, you're honest and open. And I've opened my Dr. Ron bag after you told me. I'm like, okay, based on the data you gave me, here's the plan and here's what we're going to do.
let's be honest, those clients that normally ask that question, I mean, I run an advertising agency, and anybody that's like, what are you going to guarantee me, are usually never satisfied. Even if you reach the guarantee that you wanted to, that you kind of settled on, they're just never satisfied. It's crazy.
I mean, I guarantee that you will sleep better at night, and I guarantee
Yeah.
you that you'll be in a much better financial position than you are today. But if you're asking me to put a number on it, that's not, maybe some people do. I've seen you go on Instagram and you say, hey, I guarantee that you will pay no taxes. Well, I don't know the people personally, but I know from experience, having done this a long, long time, like you said, decades, I've never known a profitable business to not have to pay some taxes. So you pay the minimum that you have to by law, whether it's IRS or the state, but you still have to pay your share.
So when it comes to like corporate taxes and small business taxes, those have to be like different. Is it different because there's like bigger numbers, or is it just different situation?
Well, the IRS, depending on the kind of business, if you're one person, the most common way to set up a business is an LLC, limited liability company. And if you're one person, then you have a single member LLC. And a single member LLC, not to get too detailed, but the IRS treats a single member LLC as the same as a person. Because if I'm Ron and I have Ron's coaching business and it's just me and I have one person, me and my business are the same thing. If I have a corporation, and so the taxes generally are lower for personal than they are for corporate. And it depends on how much you make. If you're Amazon or Microsoft, they're in a different league, obviously, but a person versus a corporation. The IRS has separate rules for corporations, especially small businesses. And so there are startup expenses. Current limit is depending on the value of the company or how much you make, either $5,000 or $10,000 a year of additional expenses that you can write off that are business related that don't apply if you're just Ron as a person. So, Kamala Harris, when she was running for the candidacy, she wanted to up that limit to 50,000 because since COVID, the number of small businesses in the U.S. have doubled and tripled and quadrupled. I mean, every year there's like 3 times as many more small businesses open as people lose their jobs or get disenfranchised or they don't want to work with other people. They set up their own business. Kamala was pushing, and a lot of people on Congress were pushing to increase that. It's currently the max you can do is 10,000 a year for startup costs. She wanted to increase it to 50. Now, what the current administration or the new administration will do, I don't know. But in any event, having a business, first of all, there's more things that you can write off. And secondly, the limits are higher than they are on your personal side. And so if you have a business, it's much better to set up some kind of separate company. I'd say if you make over $25,000 a year, even if you have a side business, right? You have a full-time job and you have a side business. If that side business is bringing in more than $25,000 a year, it would be to your best benefit to set up some kind of a corporate structure like an LLC so that you can take advantage of that and pay less taxes.
Love it. And then I always hear so many different things when it comes to like S-corps. I'd love to know like your opinion and everything on them.
An S-corp is good, I would say, if you're making rough numbers, $250,000 a year. I mean, at some point, so if let's say you're a single person, you're starting your business, you're making less than $25,000, it's okay just to run as a sole proprietor. Once you hit $25,000, I think it's good to set up something, and I'd set up an LLC. When you get to the point where $250,000, now you're talking about a business that is bringing in, probably at that point, you're going to have employees. And the difference, one of the main differences between a corp, an S-corp, for example, and an LLC is an S-corp shields you personally from liability. So by the time you get to $250,000 in revenue, you probably are employing people. You're either providing a product or service that is going out to a lot of people. You run the risk, especially in this world, of someone suing you or there being a problem. If you have an S-corp, under the IRS laws and legal laws, it's a separate legal entity apart from you. So if I have Ron and I have Ron Coaching, which is an S-corp, if something happens and someone doesn't like my coaching, they get upset and sue the corporation, they can't come to me because me and the corporation are 2 legal entities separate. If I have an LLC or a sole proprietor, me and the company are the same thing, which means if I live in a house and I have a house and I don't have a separate legal structure set up and someone is upset about something that I've done, It doesn't happen a lot in service providers, but if you're like, let's say you're Tesla or you're selling a car and you sell a car to someone, their car blows up and there's an accident, someone gets injured, you certainly don't want to be in a situation where they can come after your house. You want to have a separate legal entity. So whatever happens for the business is contained in that business, and they won't be able to get to your personal assets. You won't be kicked out of your house because something the business did.
I always thought an LLC kind of protected you as well, or is that?
And again, I'm not a lawyer and I'm not giving you legal advice, right? But an LLC, there's an LLC as a single member. So like I have an LLC, all right? When I started, originally it was a single member because it was just me. As I've grown, that's changed. But a lot of people, when they start off a single member, the IRS and legal treat a single member LLC like a person. So you have limited protection against something that were to happen. And again, most people that do that are starting out and they're not making a lot of money and they're just getting started. And so probably the risk is kind of minimized. When you get to the $250,000 a year and your business is growing and you probably have people helping you, that's the point in time when you need to probably talk to a lawyer and say, hey, let's set up an S-corp. LegalZoom also does a great job. I don't work for LegalZoom and I'm not making anything from LegalZoom, but what I tell a lot of my clients is if you have questions about what kind of a structure to set up, LegalZoom does a great job and it's very cheap and they have a bank of lawyers all across the US. We'll help you walk through that. But the more successful you get, the more time and energy and money you need to spend on making sure that your company is protected and that you are protected.
Love that. Yeah. Cause I think that's one thing that a lot of people just kind of overlook is just the protection of their assets and everything that they've been building.
And as you grow in your business and as you make more and as personally you have more, if you have a house or a car and investments, 401k, retirement, whatever, the more you have to lose or the more you have to risk, the more important it is to set up a structure that will protect you.
Yep. 100%. How do you think like the recent government policies? I think I seen it yesterday or the day before about like the SBA loan caps and government contracts are all increasing.
Yeah.
What do you think? Oh, go ahead.
Yeah. In 2025, some laws that were put into place are set to expire, both personal and business. And the new administration coming in obviously is markedly different. I won't get into politics, but the new administration coming in is a lot different and has a lot of different priorities than the one that's leaving. I think what they all have in common is that they want the American people to succeed. Now, the definition of success might be a little bit different, but I think that everyone would agree that the small business is the backbone of America, especially during COVID. Like in California, where I live, a lot of small businesses and restaurants were hit hard and they closed. The California state did a lot of things like allowing people to convert the sidewalks and parking lots outside into restaurant space because during COVID, you couldn't eat indoors. And I think that governments, as more and more people leave big corporations and start their own business, they're going to have to pay attention to what those people need. And a lot of people need a loan to get started. During COVID, they had, PPP loans. Some of them got paid back, some of them didn't. That's gone away now. If you're starting a small business, especially if you're employing people, the government, whether that be your state you're in, like in California for me, or IRS, will give you preferential treatment because you're actually employing people. You're taking 1 or 2 or 3 or 5 or 10 people who previously weren't working, and you're doing your part to employ them and to give back to the economy. So SBA, I don't know what the rules will change in 2025 because the current laws will expire, the new ones will come. But I would be very surprised if something at least as good, if not better, isn't put into place because government understands small business is the backbone of the company, and the government has to do everything it can to support these to make them successful, because with interest rates rising and inflation and all those things going on, it's really in the best benefit. I mean, if you live in a city and depending on the population, if you start your own business and you hire 5 or 10 or 15 or 20 people, that's 20 people previously that didn't have a job and now you're employing them. It's to the benefit of your state or city or government to help you out to be successful so that you can continue. And then a year from now, you go from 20 employees to 40 or employ more. So that the business has a stake in it because those 20 people then will make their own money, pay their own taxes, and it will all help the economy. So I don't know exactly what the rules will be, but I would be very surprised if something similar isn't put in place next year when the current rules expire.
No, I completely agree. I don't know what's going to happen or anything like that, but I think it is going to be in favor of the small businesses. And it's going to get a lot more people to actually be able to afford to start their business and everything there. I think the crazy thing is like going back to like the credit cards and all the people having credit card debt, like the interest rates on credit cards and have been just, it's crazy how high they've been going. I think I was looking at one just to kind of like see what it is, and it was like 32% or something like that.
It used to be that like 20%. I think that for a while the maximum they could charge was 19.99%, and someone went to 22 and 25. And I agree. I have credit cards, and luckily I pay them off, and I haven't had a new one in a long time. But I get offers all the time in the mail, and I just opened one to see what it was. And you're right. Yeah. Like promotional rate of 0% for like 14 months, right? Which is great. But then after that, it's 32.99%. And people don't realize, I mean, if you are the kind of person, or if you're waiting on, if you have a job or are going to get a promotion or get a bonus, and you have a legitimate way to pay the card off within those 14 months, then it's a great deal. You pay like 2 or 3% up front. You don't pay anything for 14 months, and as long as you pay it off. But you go into 14 months in one day, 32 or 33% interest. I mean, you're going to be underwater quickly. And so what I tell people, I mean, I've done it myself. When I started a business several years ago, I need to buy some equipment and computers and hire some people and do some graphic design and stuff. I took out a credit card that had 0% interest for 14 months. And I paid it off way before the 14 months ended. And I had every intention of paying it off. And I'm a finance guy, and I knew what that meant. But a lot of people view it as free money, and what the credit card is banking on, that 14 months from now, you'll forget about that. Yep. And you'll be paying the monthly fee. So after 14 months, you probably only paid off, 5% of the balance. You have the majority of the balance left, and the credit card company loves you because now you're paying 33% interest every month, which is, it's a huge amount. And so I caution people to say credit cards they have personal loans. You get things in the mail all the time, or go on the internet and you can search and you have, a long list to choose from. Be very careful about the fine print, and make sure that whatever you take out, you have a legitimate way to pay it off before the interest kicks in.
Yeah, I think even some of them go, and if you don't pay it off, they still accumulate interest for the full amount that you put on in the promotional period.
I think the big bank, again, I'm not working for the bank, but the ones I've seen like B of A, Chase, et cetera, like that, will say you have 14 months, which is more than a year. Let's say, that's forever. Well, 14 months. I mean, I have a hard time understanding. As I'm getting older, 2025 is around the corner. We started COVID in 2020. That means 2020, or the pandemic, has been around for 5 years. In some ways, it seems to me like last year was 2020. This time is flown by, right? 14 months goes by very quickly. And especially if you're in financial stress, it's going to fly by. A lot of big banks, and again, I don't work for a bank, I'm just saying in generalities, a lot of big banks will say, okay, after 14 months, it starts accruing. There are some banks that are very aggressive to say, to your point, if you don't pay off the entire balance by the 14 months, they can go back to day one and charge you interest, which means you're going to get a huge bill, thousands of dollars that are due, because they're going to start accruing your interest from the first day you took out that credit card. So every credit card, there are hundreds of credit cards. Be very careful. Read the fine print. If you don't understand, call them. If you ever feel, my goal is, don't ever do anything under pressure, under duress. If you ever feel like someone is not being clear, if they're being evasive, if they're forcing you, this promotion ends today, don't take that deal, because anything that's good will be around. And don't sleep on it. Talk to your spouse. Think about it. Talk to someone. Call me. Talk to a financial advisor. Your credit and your money is your life. And, one wrong mistake could cost you a lot of money.
Oh, I completely agree. Back when I first started my business, I took out a credit card to pay a coach. And it was like $10,000. And the second month, it was the 12 months interest free from American Express. Second month, I paid one of my American Express cards and I switched the due dates. And I thought I was paying the right one, but I paid it on the wrong. So they canceled the entire 14 or 12 months of promotional interest-free balance. And I started getting hit with 22% on 10 grand just over and over again. I think it took me 2 years to finally just pay it off and get myself to a position that I was I could actually pay it off. So yeah, any high ticket offer that I'm marketing for, anything like that, I I refuse to do it if they're like trying to get a bunch of people, especially people in like business opportunity and stuff like that, that they're already struggling for finances. And now you're going to have them put this on a credit card and stuff like that. It's just going to screw so many people over. So I don't even like promoting offers that the closers are trying to just put it on credit cards.
Yeah, if you feel, and it's talking about, all the scams today, what they say is if someone is forcing you to make a decision like right now, like before, you have to do it before the phone ends. It ends today. Generally, that's not your best option. So never do anything that you feel like you don't understand or that you're feeling pressure to do. That's what my advice is.
Yeah, 100%. Not only that, but the FTC's not too far on their tail because fake scarcity and urgency and stuff like that. Like they do not mess around with any of that.
Yes, exactly. Your financial life and future. I mean, one bad thing will stay on your credit for like 7 years. One mistake, one missed payment, 7 years. That's a long time to be in your credit. The next time you apply for a loan or a credit card or buy a car, any of that, that's going to follow you for 7 years. You're going to have to explain, why did you miss this payment or why did you do that? It's not something to be taken lightly.
Yeah, exactly. So I'd like to discuss like how rising inflation and shifts in consumer spending habits are affecting small businesses. From your perspective, like what strategies can entrepreneurs use to really kind of adapt to everything that's been going on over the last 4+ years?
I think that a couple of things come to mind. One is that you have to know the value of what you're providing. So if you're a small business owner and you're providing, it's different if you have a brick and mortar, if you have a restaurant or something, but if you're providing services, if you're doing graphic design or accounting or finance or legal, you need to do some research to figure out in your market, in your area, what is the going price, and be honest and open about doing that. Some of the things that I've done in the past, or seen in the past, some clients I've worked with, when they get in trouble are when people heavily discount. So if someone, I'm making this up, you hire a coach and the going price is $3,500 and you find a coach that's going to do it for $1,000, you need to sit back and say, why is someone willing to do this for a third of what the going rate is, right? Kind of similar, like you should never sign up for a credit card if you feel pressure to do it. You need to, the old adage, you get what you pay for, is very true. Now, there's nothing wrong with getting a good deal. Everybody wants a good deal. Everybody wants a discount or a sale. But if the going price is $3,500 and someone is doing it for $1,000, you have to really wonder, what are you getting, right? In my past, in the long distance past, when I tried to go with the cheapest provider. Now, so if the going rate is $3,500 and someone's willing to give it to you for $3,000, that's okay. That's legitimate. But $3,500 versus $1,000, that's probably unrealistic. So if you're providing services, be open and honest about what your values are worth. On the spending side, I think when you have a business, one of the things it does, for example, one of the big questions I get is, can you write off part of your rent or your mortgage as a home office deduction? And in the IRS and federal government in the US, the answer is yes. However, there are very specific rules. They want you to have a separate, the best case scenario is that you have a separate dedicated office. So I live in LA and I have a condo and I have 2 bedrooms, luckily. And so the bedroom I'm in is my office. And I don't do anything but work in this office. And so I can write this square footage off on my taxes. If I lived in a 1 bedroom, or if I had multiple roommates, or this was my bedroom and my office, it's much more difficult to do because the IRS wants to, they're not going to come knocking on your door, but they want some valid proof that the space you have is a dedicated space. So there are things, if I didn't have a business, my mortgage would be 100% on me personally, right? And there are interest deduction limits for that. But because I have a business, I can take a part of my mortgage, a part of my utilities, a part of my phone bill, my internet, all that, charge to the business and get more deductions for me in total than I would if I didn't have a business. And so when you have a business, I think one of the biggest things that people don't do is they don't maximize the deductions they can take for the business. They pay for their cell phone bill and they figure, well, I need a cell phone. Well, if you call clients on your phone, you can write that off as a business expense. If you're doing it on Zoom or on the internet like we are now, and you run a business, like I do all my coaching or 99% of my coaching and advice over Zoom, my Zoom license, my internet, my computer, everything I need to run my business can be written off on my business. And so a lot of people don't realize they either, I've had some clients that say, well, I heard you have a home office deduction, so I'm going to write off half of my mortgage. And I'm like, well, The rule is that you take a tape measure out and you literally measure the area of the office or the room that you're using, and you have that as a percentage of your total. It's very unusual that that office space would be half of your house, right? Normally it's like a 10% or 20% of your house. And I think for me, it's like 18% of my square footage or something. But you need to be detailed in doing that, because even though it is allowed, it is the single most audited expense from the IRS. And the IRS will be open about that. If you have a small business and you're just starting out and you have a home office deduction, it is the number one thing. Now, it probably on its own won't make you raise a red flag and say, "Can do that." But for example, your friend that was 6 years behind, guarantee you, if he's 6 years behind and he applies for a home office deduction, he's probably going to get an audit or a review of that. So if you have it like in my house, I have a dedicated space. I've had the tape measure out. I know exactly the square footage. I've done that. I have it documented. So if the IRS ever came to me, I would be able to simply say, "Here's a picture of my. I don't have a bed in here. There's nothing else that happens. It's just my office. Here's the square footage. It's legitimate. It's verifiable, and there would be no problem." So advantages of what you can do in a business are many, but you have to follow the rules, right? Kind of like everything in life. You can't speed, you might get a speeding ticket. If you do something above and beyond what the IRS will allow you, you might get their version of a speeding ticket, which is the notice in the mail that says you have a penalty. So I help people realize what they can do, but do. And I've had clients that I refuse to work with long-term who said, I know the square footage of my, house or apartment, I should only be writing off 20%. But I don't want to pay that much taxes, so I'm just going to say it's 50%. And I'm like, well, I'm not going to lie. I'm not going to tell the IRS as your financial person that 20% of your expenses is grown to 50. Everyone, has their own take on that. But I help people within the rules, within the guardrails of what the IRS or the state has set up to maximize them. I think most of the people, it's very rare when someone wants to push the boundaries. Most of the people don't realize the things that they can write off on a business, and I help them realize, hey, you're not taking advantage of everything that you can or you should. And I help them do that and make sure it's documented. So if they ever do get audited down the road, they can just pull out the document and say, here's the detail.
What are some of the most common things that people just don't know that they can write off?
Phone bill, internet, part of your house, training. If you've gone to a coach, I've helped some personal trainers who, like for example, I think the best example, some personal trainers who subscribe to a meal service, and one of them got questioned by the IRS, and I helped the guy send a letter in, and because he got most of his clients and most of his money from sponsorships by appearing shirtless on Instagram, that was basically his business, his calling card, his product was his body. That's how he got most of his clients, right? And so because of that, he had to work out and eat a certain way. So his gym membership, his food delivery service, his supplements, all that. Now that's an isolated case. So if you're an accountant like I am, or a lawyer or someone else, or a marketing person, you're probably not going to be able to write off your food and your supplements. But anything basically that you need to do your business effectively. So if you're a photographer buying camera equipment, travel, that kind of thing, travel. Also, if you're traveling for work, if you're going to a conference, if you're going to visit a client, if you're going, if you need food, like if that personal trainer, he could write off the miles that he needed to go to get to the store to buy that, or if he had to buy, an Amazon Prime subscription because he got things that are work related. A lot of people have two accounts, one for business and one for work for Amazon. If you have Amazon Prime because you're ordering stuff for your business, all those things. So, and basically, if you think about, do I need this to do my work, from the chair you sit in to the paper you use, the printer to the ink to the phone to cell phone to Zoom, anything that you have to do to conduct your business is fair game, as long as you can support it and it's dedicated to the business. Now, as you scale in your business, it gets less and less important. But if you're making $10,000 a year and you have a cell phone and you're spending 90% of the time on the cell phone on personal calls or playing video games or texting on social media, and very little of it is, for your business, you should probably split the bill in two. But if you're making, a sizable amount of money and you conduct all your bills and it's clear that you're making money and you're doing your best to run your business and your phone is part of that and your Zoom license is part of that, then that's all fair game to write off.
Nice. Yeah, I didn't know that. So you talk a lot about.
That's why you should
Yeah.
hire someone to help you out. So I mean, like I said, it's very rare that someone doesn't learn something when you work with a financial advisor, because everyone has their area of expertise. You're great at marketing. The guy I talked with was great at fitness. I gave me some
Yep.
training. I'm good at finance. I've been doing this a long time. Everyone kind of has their area of specialty. And what I've always subscribed to is the best way to do something new, and the fastest way, the most effective way, is to hire someone or work with someone who's done it before. In other words, people say pay for speed. Could you learn everything that I've learned in my long decades, like you keep talking about decades of experience, by going to YouTube or looking it up on Google? Well, yes. Is it always going to be right? No. And is it going to take much longer than working with someone who's done it before and can just tell you, do this, step A, step B, step C, do this in order? So it's always easier and fastest and safest to work with someone who's done it before, and that's their area of expertise.
Oh, every single time. Every single time. You talk a lot about the importance of financial freedom and time management. What are some practical steps that small business owners can take right now to balance both as we approach the end of the year?
One of the things, the tips that, and this is another frequent question people ask me all the time. Hey, I went to a networking fundraiser last night. People were asking me, what's your number one tip? And one of the things, and people first look at me like, why does that matter? If you can do something in 5 minutes, do it now and get it done. And whether that be you go to get the mail and you have a stack of mail and there's some bills in there and some things that are junk, and you're like, oh, I'll deal with it tomorrow. Then you put it on your desk. And 2 or 3 days later, now you have a stack of 10 or 15 envelopes. You don't realize how much mental energy and how much stress you have looking at a pile of mail to say, is this a bill? Is one of them's from the IRS? What do they want? The same thing goes with the digital clutter. So I'm a huge proponent of only keeping, I don't have any on my phone that I use all the time, right? I don't have any notifications turned on. I have friends that we go to dinner, we go to a movie, go to their house, whatever. It's like every 3 seconds something is dinging or chirping or doing that. How you can concentrate is beyond me. So my advice is, if you can do it in 5 minutes or less, do it. That means respond to the email, delete the email, unsubscribe, take that app off your phone, turn off notifications. If you get paper mail, look at it. What I do in my lobby of my building is I look through the mail. If it's junk mail, I don't even bring it to my house. I literally put it in the shred box and I don't bring it into my house. If it's something I need to open, I see what it is. If you can pay the bill, if it's an online payment, or respond or do it like that in 5 minutes, do that, file it, shred it, put it away. You never have to look at it again. The same thing with an email. If an email comes in and it's a client talking to you or something like that, and you can respond and do it, the mental clarity and what you have in the future, because the flip side is the more you put that off, every day you come and you have 5, 10, 15, 20, by the time you get to 100 emails, now you're like, oh my gosh, I'm going to spend 2 hours doing that. I make it a point at the end of every day to go through my phone and my computer and clear out or delete or move or respond to all of my emails. Because the worst thing is when you wake up in the morning, you start at home or in your office, wherever you're working, and you look at a lot and you're already behind. Oh my gosh, I have 100 emails from yesterday that I forgot I had. It's 8:05 in the morning and I'm already behind. So if you don't need it on your phone, delete it. If you don't use the app, delete. You can always add the app back. Don't turn on notifications, turn them off. Don't subscribe to things that you don't look at or they're not important to you. And so if you spend even a week, like look at every email that comes in and say, is this really important? Do I really need Crate and Barrel and Pottery Barn and all these different, how many times do you shop at Crate and Barrel? Is it only at the holidays? So delete things, unsubscribe, do that. It used to be, and I'm dating myself again, but it said cluttered mind, cluttered desk, right? It used to be back in the olden days that if your desk was piled with paper, it probably means your mind is similar, because your desk is so messy. How can you concentrate? Now we're less paper, we're more digital. If you open yours and you have, 100 emails and 27 texts and 5 missed calls, all of your energy, once your mind sees that, even though you think, I'm not going to worry about that, some part of the back of your mind is like, you know what? I have 27 text messages. I wonder if one of them is important. If they're junk mail and more companies, we'll give you 10% off if you subscribe to our text. Unless it's something that you buy frequently, get rid of it, delete it, and do that. And so I'm all about cleaning and organizing at the end of it. I never leave at the end of the day, especially the end of the week. Friday before tomorrow, before I log off, I delete, clean, eliminate all that, because the last thing I want to do after a nice long weekend is jump on Monday morning to say, oh, here are the 50 emails that I could have responded to on Friday that I've been thinking about in my subconscious mind. I wonder what these emails are. Now it's Monday. Spend 30 minutes or 60 minutes, get it done, delete it, move on, turn off notifications, and you're in charge of your phone. Your phone should not be in charge of you. That's my soapbox.
No, I completely agree. It's kind of like your friend that didn't file his taxes for all of those years, where it just kind of sat in his subconscious mind. And then all of a sudden, next thing you know, he's thinking about it and he's just getting this panic that has been building up over the years he hasn't filed. So yeah, I completely agree with
One
that.
of the best features that I did, and I've only done it for like the last year, is I finally enabled do not disturb on my cell phone, because I used to have it on all the time. And that would be like, I would be asleep and at, 12, I mean, with a business that's growing, anyone, anywhere in the world can reach out to me. And so my messages on DMs on Facebook and Instagram stuff were constantly dinging. Once I said, okay, I'm going to bed 10 o'clock at night, that's it, out of office. I know do not disturb. I sleep much better. Knowing that people are not going to bother me, but D, my subconscious mind isn't because your computer screen, and a lot of people, we keep it on your phone right by your bed. The blue light from the screen is very counterproductive to your sleep cycle. And the constant dinging and messaging is also as well. So turn it off. Don't look at it at whatever your bedtime is. Put a do not disturb on it and forget about it, unless it's something urgent. Like if there's a family member that's in the hospital or you have a medical emergency, that's fine. But the general day-to-day business, get the sleep you need, turn it off. It'll be there in the morning. Take care of it, and you'll be much happier.
Love it. So I know we've covered a lot today. What's next for you and your business as we head into the new year?
Most of the clients that are reaching out to me now are either, I'm worried about year end. I don't know what to do. Taxes are coming. Help me plan. Some of them want to have budgeting. Some of them are working on growing their business. They want me to help them out, figure out what their budget is or what they should do for the new year in 2025. So again, I think it probably starts with being honest with yourself. If you need help with taxes, it's much easier to start now in December than it is coming to me on April 10th. A lot of people, I think one common theme is like, you know what, I can't deal with my taxes. I'll deal with that next year. Anyone who is legitimate that is working on this, every month that we get closer to April, they get more and more and more busy, right? Which means you're going to have less time to help you out. So if you don't have your taxes ready to go, if you're disorganized, I mean, one of the first questions I ask a client that comes to me, hey, I have a business. One of my first questions is, how much have you made? If their answer is, I don't know, that's a red flag. Because if you're running a business and you don't honestly have, it doesn't have to be to the penny, but a rough idea of what you brought in, probably means you're not organized, which means when you go to do your taxes, it's not going to be easy. So either get organized or help someone to get organized. Be honest with yourself. Get ready for year end, because we're 2 weeks away from the end of the year and you can literally start your taxes on January 1. You shouldn't wait until April 15th when they're due. You should start right away. And if you need help, find someone who can help you now, because you also now have 4 months. If there's a lot of work to be done, there's very little you can't get done in 4 months. If you come to me and wait until March or April and you have a week, and you don't have anything organized, and now you have to go back and figure out what happened for the last 12 months. That's very hard to get done in a week. Now that we have 4 months between now and the time it's due, 4 months, it's doable. And I can put you on a plan and say you have to do this amount every week in order to get there. So be honest with yourself, start ahead, find someone who can help, and get organized and spread out the time, because no one likes taxes. I mean, I'm an accountant, right? But it's my favorite thing to do. Would I rather be sitting on the ocean, sipping a drink, or doing my taxes? It's sitting on the ocean, right? But it's a part of reality. And you can, if I have a client that are ongoing and I want to say, what's the one suggestion? My one suggestion is take care of your business every single month. If at the end of the month you take an hour or two to figure out how much have you made, how much have you expended, how much can you write off in business, and detail all that out on a spreadsheet in QuickBooks and something, and your financial advisor will help you with. You do that every month. By the time you get to the end of the year, your taxes are basically done. All you're doing is you're adding up each of those 12 months that you've already done. If you ignore all of that and say, I don't want to talk about anything, and then we wait until March, and now I come to you and I say, hey, you spent this $500 on this consultant in January from a year ago. What is it for? You're probably not going to remember what it was. So my advice is, if you have a business, run your accounting, take care of your transactions, get all the detail each month for January, February, March, April. That means when you get to the end of the year, you're simply adding up the 12 months, but you already know the detail. You're not trying to recreate a story that you may or not remember. And again, start now when you have 4 months. It's 4 months until taxes are due. It's much easier to do it over 4 months than to wait and only have a week left. So start early and find someone that can help you.
Yeah, that's one thing that I was going to bring up as well, is like those 4 months, like there's so much going on from January to April. Like there's no way you're going to be able to remember what's happening or what happened back like last January and April and everything there. So yeah, that's definitely, that's what was going around in my mind, is like, you just don't know. There's no way you can remember.
I mean, like if you think about it, a week ago, what did you have for dinner? I have no idea, right? This bill that you have on your credit card, sometimes you get your credit card statement and you even have trouble remembering, gosh, a month ago I spent, $50 on Amazon. What was that for? I don't remember. Well, if you can't remember now, what's going to happen a year from now? You'll have no idea, right? So get it organized. A month is a doable amount of time. So at the end of the month, sit down with your bank statement, your credit cards, look at what you've billed on Stripe or your credit card processor. Put together a little spreadsheet, a snapshot of what did I do in my business for the month of January. Do that every month. And after 12 months, you're basically just adding the numbers up. You're not trying to recreate what has happened over the last 12 months.
Love it. And then final question, fast forward to the end of your career. If there's one legacy or lesson you'd like to leave behind about finances, financial empowerment, what would it be?
One legacy that I want to be known for?
Yep. If you'd like to leave behind.
I would say that Ron taught me to do something that I thought I couldn't do. So most of my clients at the end of my time, the thing they're most proud of is that they are able to do, whether it be their taxes or their organization or putting together a budget, getting a credit card, getting out of credit card debt. They did something with my help that they didn't think they could do, and being proud of that. And I played a small part of that. That's what gives me the energy to keep going.
Love that. That's super powerful. Ron, I appreciate you hopping on here with me today and spending the last almost an hour. For those that want to either hire you, learn more information, like what's the best place that they can come and find you?
My website is ron911.com. So that's, just go to the web, ron911.com, and there's a contact page. There's a calendar link. You can set up a time or send me an email. Also has links to my social media and some other podcasts that I've done. So that's the easiest way to get a hold of me.
Perfect. Again, thank you so much. Appreciate your time. And I look forward to, continuing to see your content.
Oh, great. Thanks again. Appreciate it. Thanks, Michael.
You're welcome.
Okay.